You are watching Market Watch, the brief overview of the key events from the world of finance. On Friday, we talked about the reasons for the sell-off in the oil market, but Saudi Arabia, which is one of the key market participants, is not interested in reducing the value of black gold. The Financial Times report that Saudi Arabia is likely to extend the reduction in oil production by 1 million barrels until spring provided quite strong support for oil quotes. Nevertheless, the further direction of the price movement will depend not only on OPEC production volumes, but also on the prospects for changes in physical demand. Consequently, investors may still react sharply to data indicating a change in the growth rates of the world's largest economies, the United States and China. Since this week will be short, due to the celebration of Thanksgiving in the United States, it will be poor on the publication of important macroeconomic reports. Therefore, the volatility of oil trading may decrease. Nevertheless, we should not forget about the publication of the minutes of the meeting of the Federal Committee on Open Market Operations. This report helps to more accurately determine the mood of the voting members of the committee regarding future changes in the monetary policy of the U.S. Federal Reserve. Although the vast majority of traders and investors do not expect a rate increase, these protocols remain very important, because they can also indicate the likelihood of a reduction in the key interest rate. Surprises are rare, but professional investors never lose sight of this report. And now let's move on to gold, which reacted extremely optimistically to a moderate decline in the yield of U.S. government bonds. Let me remind you that the yield of securities with a maturity of 1 year decreased by about 0.25%, while the yield of 10-year securities decreased by more than 0.5% from the maximum reached this year. It is also important to consider that this trend may continue. Thus, the demand for the US dollar is decreasing, again increasing interest in gold. At the same time, the appearance of any information indicating the Fed's willingness to lower the rate in the first half of 2024 is capable of returning gold to its historical maximum. Therefore, it is still difficult to completely eliminate the risk of a bullish scenario, although a week ago everything pointed to a clear advantage of sellers. And now let's move on to the cryptocurrency market. Bitcoin is slowly returning to the maximum of the current year, indicating investors' optimism about the readiness of the U.S. Securities and Exchange Commission to approve applications for the Bitcoin ETF creation. Nevertheless, the market remains extremely unstable and even vulnerable, because the appearance of any information indicating that the SEC will not approve applications is accompanied by active sales. Therefore, speculation on this topic will only become more frequent, which will be accompanied by a surge in trading volatility. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.